Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor. It is Friday the 13th, Friday the 13th, 2026. And I'm really pleased to tell you that Bret Oliver, the son of Michael Oliver, is with me once again. I've had him on a couple of other times. Obviously, following in his father's footsteps in quite fine style, I'd say. I really have enjoyed having Bret on in the past, learning the trade very rapidly, I would think, it seems. Oliver MSA is where you should go to learn more about Michael's work and Bret's work. And I can tell you that Michael's been a tremendous help to me over the years, keeping me from getting whipsawed in and out of markets. Emotions sometimes will make you do things that are totally against your own best interests. And Michael's been very, very helpful to me personally, and I know to my newsletter subscribers as well. So very pleased to have Bret with me today. Thanks for joining me, Bret.
Thank you, Jay, for having me on again.
You know, we were just talking before we started recording, and you said what you'd like to do is let people get a sense of what you and your father look at now in terms. Let's assume the markets, nothing crashes. Everything is going up, which is kind of what's been happening. Everything's going up because they keep printing money and there's lots of liquidity out there. What's the best things to own in that kind of environment? Well, you know, I'm very much biased towards the precious metals. I think your father is too, but there's probably some other things as well, commodities and so forth, that have been undervalued for so long that are probably looking good. But let's get started with that. Maybe just explain your thinking on that a little bit.
Indeed. Yeah, well, that's kind of our viewpoint on markets is we look a lot at relative performance of sectors of the stock market versus the broader market. And then within those sectors, sometimes we'll delve deeper. So like gold and silver miners specifically. And of course, as our subscribers know, you know, we've been bullish on those for years now. But they've only recently, I would say since early 2025 is when you actually see their relative performance gaining versus the S&P 500.
Right.
So just the question of, you know, well, what's going up more? Because everything has been going up. And let's just say, for the sake of argument, that continues, that nothing ever really crashes. There's no repeat of 2008. You know, maybe there's some drawdowns here and there. Specific sectors maybe drop, AI stocks, something like that. Where do you put your money then? What's going to go up more? So that's why we look at that relative performance so closely. And with the gold and silver miners, you know, they just broke out versus the S&P in November.
Right.
They had been rising all year, but in terms of this huge, like you zoom out, they have this huge 10-year wide base in terms of their, like, just think of relative performance as the same as a price chart, right?
Sure.
So it's just like a giant base, just as you would see on a price chart. They just broke out of that in November. So even though they've had a great run, you know, you look at their charts and you say, well, the price is, you know, it's doubled, tripled in some cases, or close to a tripling at least. You know, surely that's it, right? Well, no, our relative performance is saying these just broke out versus the S&P within the past few months. So we don't anticipate that that's just going to be, you know, done and over with in a few months, right? A few other sectors that have recently done that as well. Obviously, gold and silver themselves, the metals, also broke out in that regard at the same time in November. But then you look at base metals too. So industrial metals, and they also signaled. So XME would be one way of looking at that. That also just recently broke out at about the same time. And similarly, its performance had been going up since about April, May of last year. But they, you know, and same type of 10-year wide base on their relative performance versus the S&P, just now breaking out within the past, you know, 3 months here. So that looks like the place to be as far as we're concerned for, you know, it could be the next year, 2 years, something like that. Where let's say S&P never really has a big drawdown.
Yeah.
You know, maybe it goes down 20%, some 30%, maybe something like that, or maybe nothing. Maybe it just keeps going up. These look like they're set to go up even more.
Yeah, keeps going up relative to dollars, maybe. But so Bret, are you saying that maybe the broader base metals complex now, not just the precious metals led the way. Your father's talked about that.
Right.
So the XME, I'm looking at companies like Alcoa Corporation, Freeport-McMoRan,
Hmm.
Core Mining, which is silver and
Hmm.
gold. Royal
Hmm.
Gold, it's a royalty company. Newmont's in there, the big copper producer as well.
Hmm.
So yeah, so are you saying that maybe it's time to start looking more broadly then at some of the other metals and not just the precious metals?
Yes, indeed. And in fact, we put out some reports also in about April, May, where we focused on copper miners, platinum and palladium miners,
Hmm.
even lithium and rare earth, which they're a bit kind of headliney, with the whole rare earths issue. But nonetheless, the charts, they looked very positive. I mean, of course, they looked terrible, right? Like rare earths had gone down for over 2 years, but it looked fantastic on momentum. You huge basing action on like a 40 week, 50 week, it's like a 200-day average. So long term, it was just a matter of time as far as we were concerned before those broke out. And that was early Q2 last year that they all sort of broke out together and have had a big run.
Hmm.
But with certain bellwethers like that, if you want to look at just, XME or the Bloomberg Commodity Index, uh, just signaling breakouts and spread breakouts or relative breakouts
Uh-huh.
to the S&P. I don't think that those moves are done yet. So I
Uh,
think that's another place that you need to be looking. Yeah, copper for sure, and even steel. There's an ETF for that too, which
hmm.
I could be wrong in this. SLX, I believe it is.
Uh-huh.
Van Eck Steel ETF looks very similar to, say, COPX or REMX for rare earths. It's all kind of the same chart
Hmm.
in a certain regard that all of these industrial metals, base metals, they're moving together, and even potentially the same now with energy. So that
Hmm.
hasn't broken out yet.
Hmm.
You can look at XLE, for
Hmm.
example, and it has an equally not necessarily basing action like some of these did, but huge downtrend on its relative performance to the S&P
Hmm.
going back all the way to 2010, so the prior commodity peak, basically. It's been downtrending overall since then. So that's a pending situation that could be very positive as well, and seems, I'm doubtful that it doesn't break out with the entire commodity complex,
Yeah.
Bloomberg Commodity Index saying, "Hey, I just broke out here," both on annual momentum and versus stocks. So I think it's a broader commodity bull market at this point,
Yeah.
with the monetary metals having led the way as
Hmm.
they typically do.
Hmm. Yeah, so I'm looking at, you mentioned XLE, that's the energy
Mhm.
sector ETF. ExxonMobil, about 25% is an ExxonMobil. If the
Mm,
information I have in front of me is right. Chevron, 17 to 18%. ConocoPhillips, and a little smaller, but those are the big name
mhm,
companies. Some other things in there like Schlumberger, Energy Equipment, independent exploration production, Kinder Morgan, a pipeline company. So it's sort of a
mm,
Valero, which is refining and marketing. So it's sort of a big basket of the energy complex in
mhm,
XLE. Interestingly enough, a pretty well-known geologist who's known for his gold and silver successful exploration endeavors over
mm.
the years, told me recently that he's starting to look at petroleum, looking at
Interesting.
gas and oil and gas
Okay.
plays in one part of the world. I won't say too much more because I think he's trying to keep it quiet.
Well, and yeah.
So what we're looking at here then, clearly the metals, the commodities are broken out above
Hmm.
the S&P. So maybe the S&P keeps going up, but the commodities are broken out and have the momentum now relative to the S&P 500
Indeed.
in those. So precious metals, though, still a lot further to go from what your father says, what I believe to be true, what a lot of other people
Hmm.
believe, for a whole host of reasons that are not, I mean, fundamental reasons that we can think of. But you
Mm,
guys, and
indeed.
I know that you're very knowledgeable, and your father has his own theories about things like that too, but he stays focused on the fundamentals, and that's served him and his clients very well over the years for sure. We can kind of think that we know it all, but basically we're just one player in the markets. I'm just one player. and millions of other people are
Indeed.
putting all their information into that. And so we do very well not to try to central plan everything, right? So let the
Indeed.
markets tell us what's happening, and listen to the markets, humbly listen to the markets. So that's XLE. You mentioned the Philadelphia or the XAU. What's different about this is just mostly a gold uh, fund, I guess, right? It's
Yeah, so the
yeah,
Philadelphia Gold Silver Miners Index.
index, yeah.
So that's just another one of the indices we track for relative performance
Hmm.
versus S&P. It's often in our weekend reports. Subscribers are very familiar with it at this point. Same thing there. It's just now signaling a relative performance breakout in the past few months versus the broad market.
Uh-huh.
So even with this correction in the metals, this sell-off that's just occurred,
Yep.
which for silver was obviously more severe than gold,
Hmm.
typical. Uh, and the miners have had a bit of a drop too. Uh, no, we don't think that's it. We think it's very unlikely that, oh, that's it. Hey, we just broke out of this massive, decade-wide base versus the S&P, and we're just going to go up for a few months and be done. I don't think that that's the case. I
No.
think the mining stocks still have a long way to go before they reach any sort of normal valuations
Hmm.
and before they have compensated for the many, many years of underperformance versus basically everything else.
Right.
Especially, tech stocks have obviously they've been the center for the past 10 years,
Hmm.
not commodities. And that's just how these things are. The markets are cyclical like that. And it's every market has its time to shine. And commodities have just been overlooked and undervalued for a very long time. And so these are just fresh breakouts.
Right. Yeah, for
Mhm.
sure. And I mean, you go
Mm.
where you can make the money, and when things slow down,
Right.
people, I mean, like Hydrograph clean power for me, I like to say I made more money in 3 months than I did in 30 years in the mining sector. So when you have an opportunity like that, you got to go. You can't let ideology get in your way. I think you have to move.
Indeed.
But so one of the big things your father was, really pounding the table about
Hmm.
was the idea that he really wanted to see silver outperform gold.
Mm.
And it did. I mean, there was a key, I think about 1.3 or so was the ratio, and it went above that, and it's pulled back a little now, but it's still, as I understand, it's still above that key number, right?
Indeed, it is. So yeah, that breakout for silver versus gold also occurred in November last year, and so that means it's only been really 3 months up for silver in that sort of new regime. And it's obviously had a sell-off here, not just in terms of its net price, but versus gold. It dropped a lot more. Gold went down, well, silver went down 40%, I think almost.
Yeah,
Maybe even precisely 40%, and gold was down half that. So
yeah.
so as you'd expect, the ratio has kind of reversed some. But really, if you look at where our breakout level was, this is basically just a back test of that breakout. That's what it looks like so far. So, I mean,
Hmm.
if it dropped further, let's say silver went to 50, seems there's a lot of people who think that's going to happen. I don't think that's necessarily the case.
Yeah,
Well, then, sure, that ratio is going to go deeper the other way.
yeah.
But that's not our current thinking. We don't anticipate a steeper drop than that. We had been
Hmm.
anticipating some kind of correction at
Sure.
the midpoint of this huge move in silver.
Hmm.
And it came a little earlier than we expected. We were thinking maybe February or March or something like that. Turned out it was just right at the end of January, beginning of February. Kind of oddly precise. But it's there it is, right? Okay, so we're getting that sort of midpoint correction,
Hmm.
and
A
we think it's
healthy, healthy correction.
right. I
I mean,
mean,
you don't
whether
want to
it's
see
just
anything going up parabolic. It's not going to have much of a life left. So,
indeed, and maybe it's just leveraged longs taking profits, or who
mm,
knows? Maybe there's manipulation of it. We try not to speculate on that.
sure.
But I would venture that it's probably over. We've probably seen the low of the correction. That is our current thinking,
Hmm.
and so that ratio is likely to reverse from here. and favor silver for another at least several months
Hmm.
for it to make its next big move into the rest of the year, which we're still thinking is at least $200 and possibly even higher.
Yeah. Yeah, I think that most people don't understand. Your father certainly does, as a free
Mm,
market guy and a hard money guy, understands
mhm,
Austrian economics, and most people don't understand. They still think in terms of the dollar. So everything is based on
mm,
the dollar. They don't really understand that the dollar, gold is money, the dollar is not. So
right.
lasting wealth is kept in gold, no doubt about it. In terms of the value of the shares, and the silver shares in particular, Rick Rule said a couple of weeks ago in Vancouver that he had just sold 80% of his silver
Mm,
bullion and
mhm,
put it into the mining shares. And the
mm,
mining
mhm,
shares just have what you were saying a little bit ago. The mining shares have not kept up with the metals. The precious metals stocks have not kept up with the bullion. So we think there's an
mhm,
awful lot more upside to go there as well. So
mm,
yeah, I think it's looking really good in copper. It looks really good too. I know Robert Friedland's been pounding the table. He was for copper. He was in the White House with the president. I think it was last week or so. And the current administration is very gung ho on getting mining and industrial activity going in the United States. And
mm.
Friedland just pointed out to him. He said, "Everything you touch in this room, Mr. President, comes from a mine, one way or another." So, and the other
Indeed.
thing that he said is that I think it's only 0.3% of the S&P is in the mining companies.
That sounds
Less than
right.
one.
Yeah.
I think somebody was telling me 1%. Rick Rule maybe said 1%. Friedland said 0.3% of 1%, and that compares to the 1980s when I think it was 11%. So if
Okay.
now the S&P, we're assuming here the S&P is not going to go down. S&P could go down and the other things go up, but probably we're going to see more relative value in things that people need to actually produce stuff that we need, and instead
Right.
of all this financial engineering and so forth. It's where Wall Street has made a huge amount of money, and I would argue have sort of wrestled or picked the pockets of common folks in the process. But that's
Mm,
another issue. Well, let me ask you then, maybe you can give us some idea. Well, we haven't talked about the silver miners yet. You
mhm.
see silver still then, the silver miners probably outperforming the gold miners in general?
Yeah, well, they're definitely set for that, and they did have a breakout versus gold miners, which
Yeah.
uh, still remains the case. So we do think, and we sort of made a similar shift because of that to what Rick Rule did,
Hmm.
where we also shifted out of uh, not totally out of silver, not quite to the extreme that he did, selling 80%, but we shifted more toward silver miners
Sure.
for that reason. That's just what our relative performance charts were telling us that, hey, this looks like this is going to do even better than the gold miners going forward. So we wanted to get more exposure to that. And yeah, we stand by that. We still think that's the case here. And I know there's a lot of people who are gonna, there's always hand wringing
Hmm.
over every move, and there was I would say since October, the miners kind of started to lag the metals,
Hmm.
and so some people were saying, oh, that must mean the miners see something coming. It's like, well, maybe, and silver did have a correction eventually, but it
Hmm.
took another several months
Yeah.
for it to occur. Uh, I don't think that the miners are prescient. I just think that they're more emotional. I don't subscribe to the whole rational market hypothesis. I think the market's often wrong.
Yeah.
Uh, it's just a conglomerate of all of us and our decisions and
Hmm.
our emotions. So therefore, it's often wrong. It's often
Yeah.
very emotional, and so I think no, they will play catch up again, and once again do very well versus the metals.
Hmm.
We see gold miners, for example, doubling from here versus gold, which could mean something like a net tripling in their actual price.
Sure.
Something in that on that order.
Yeah. That
So, and
wouldn't be
similar for
unusual.
silver miners.
That would not be unusual, an unusual ratio. I
Right.
mean, you start to see, especially now where Agnico Eagle just reported their profits today, and they're well over a
Mm.
double of what they were last year, or more than that. So
Not
And the
surprising.
share
Yeah.
prices are not keeping up with the profits. These companies, huge amounts of cash being generated by these companies. And I
Mm,
think what that means is the big guys like Agnico Eagle, Newmont, and so forth are going to have to find new deposits. And the big
mm,
guys aren't particularly good at finding those deposits. The more nimble, smaller companies are the ones that I deal with in my newsletter tend to be those that are making the new multi-million ounce deposits, discoveries that are going to be needed. So I think you're going to see money
indeed.
coming down the chain, the food chain to the smaller producers as things continue to go forward.
Yes, indeed.
Brett, I would like to ask you though, before we conclude here, if you give us some ideas of some of the better relative performers within various sectors. We talk about gold and silver and commodities in general now being better than being in the S&P in general.
Right.
And then within some of those sectors, perhaps, so what are some of the gold miners that are doing that maybe from a momentum basis look really attractive to you? And what are some of the silver companies that look really attractive at this moment? If you're going to put
Sure.
new money in, what would some of those be?
Sure. Well, I don't want to give too much away because that's what we do in our paid service
Well,
with
for
our
sure. Oh, come on.
yeah. It's what we do with our reports
Of
is
course,
look
and
at that every
it's
month and
olivermsa.com is where people should go. Oliver,
indeed. I mean, I will say, let's say one of the big ones, right? If you want to look at some of the big guys,
yeah.
um, that that could start to outperform here. I'd point to maybe Barrett Gold. That one actually, it's potential, right? Hasn't yet. Um, some stuff that's already done well. There's big guys that have been doing well for a long time.
Yeah.
Um, Agnico Eagle is one of them, and like Anglo Gold's another. And there's some juniors too that have been doing very well. Like Abra Silver has done extremely well.
Yeah.
Um, and some very hated ones that have done very well, like Hecla and Core,
Yeah.
so that's um which we went heavily into because we sort of figured, maybe we were stupid for thinking this, but it's like, hey, everyone hates these, everyone says they're junk,
Yeah. Yeah.
but we're just looking at their relative performance and just some simple things like simple trend lines on momentum and even on price, and it's like, damn, these look like they could have potential. Sure enough, they exploded
Yeah.
far more than a bunch of other miners out there
Sure.
in just the
Sure.
past couple of years. So,
Yeah.
um, yeah, no, I think it pays to kind of assume that the market is probably wrong most of the time,
Hmm.
and say, hey, if everyone hates this stock, but the charts look like this has great potential, maybe just go ahead and go into it a little bit. But so
Yeah.
again, I don't want to give too much away as far as all
Yeah.
that because
Of
that's
course
what
not.
we
Of
do
course
for our
not.
paid service. So.
Well,
Mhm.
if you want to look at something that's hated, what about
Hmm.
Bitcoin?
Oh, sure. Well, Bitcoin was that's one that, we do it every other week.
Uh-huh.
We look at that and we had been looking at the 3-quarter average on that, which
Hmm.
broke down. So it had structured on that several times over the past few years. And so that broke down actually. It was in November last year. So going opposite the metals. Unfortunately, all those people on Twitter who were talking about the shift from gold to Bitcoin were
Yeah.
incorrect, and it was the other way around. So that our level was above 100,000. It was 107,000 and change that we wanted to see it close below a monthly close,
Uh-huh.
and we got that in November.
Yeah.
October danced on the line. And then we put out a target recently. We said that 60,000 was at least an initial downside target, that it should at least go to there. And so it has. That's about it's a 50% drop from the
Hmm.
all-time highs.
Hmm.
And maybe that's it. But for now we're saying, hey, look, it broke this multi-year wide support on quarterly momentum. We can't really continue to be bullish on it right now. It'll have to prove itself again, get back above some of those levels that it broke. So for now, we remain bearish or neutral on it, and it hit our downside target of 60,000
Hmm.
and bounced from that nicely. So we'll have to see what it does from here, but that's just our current stance. We remain, I would say, bearish at worst or neutral on it at this point.
Hmm. Yeah, I must say that I watched, paid pretty close. Not that I own Bitcoin. I've never
Mm,
been into it, but I was always interested in it. So I watched very closely your reports, and I thought you guys
hmm
kept a very open, very open, very much an open mind towards the whole thing, and
hmm
started to give some warnings before a lot of other people did that maybe it could have some downside risk, and you certainly were right about that as well. Well, before I let you go, I'd
Indeed.
like to ask you just about, a personal favorite of mine is obviously Hydrograph Clean Power. And I know you can't say too much about it because there's not that much data. And also, I should also mention that I know you and your father used to, help people. People would call and ask you about a given stock, and you'd go do some
hmm
research on it and do it. But you guys have gotten so busy now because you've been so successful that you're no longer doing that. But I think I was able to twist your arm for a little bit of on Hydrograph Clean Power, since we've talked about it before. In the past, you talked about it being you said you sort of watched the 10 week moving
hmm
average, and that's what I've been doing. And it seems to, right around there, it's been hanging in there with that 10-week moving average. I
hmm
look at it every Friday and run a weekly average that way. But anything you can see in the charts at this stage?
Sure. So yeah, I don't want to come off as, recommending any specific companies or
No,
anything like that.
no,
So
not recommending. Just what it,
right.
and you can't say a whole
Uh,
lot because, but when until the rubber hits the road and the company starts producing profits and this and that, it's always
mhm.
sort of like people are a little nervous about it, right? So,
Well, sure.
so,
And
so
it
now
had a
we want to go
huge,
to people like you to somehow just see the magic, work your magic and tell us
right.
exactly, exactly what's going
Well,
to happen here. No, no, I'm not going to put you on the spot. I just want you, doggone it, tell me exactly.
tell you exactly where it's going to go. Yes,
Exactly. Yeah,
I can't really, that's the thing with something so new, right?
yeah,
You can't really make a technical forecast. You're more just buying something based on, what you think its potential is going to
yeah.
be.
Of course.
And so I can only go off of, mainly short-term things. Like I pointed out the 10 week and how it had been riding that up. It broke that at some point, just a few months ago because it
Yeah,
peaked in August
yeah.
last year.
Hmm.
And it's kind of been chopping either side of that average
Yeah.
now,
Hmm.
since then. And so yeah, that could just be consolidation up here,
Yeah.
which on the OTC, it's $3 basically is the
Yeah.
high, and the low is about $1.60. That was the low in
Right.
December. So it's sort of been chopping between there for a few months, and it broke that shorter term 10 week, and now it looks like it wanted to hold above its 30-week average, so a little bit longer term. And for now, so I'd say like you don't want to see it get below $2.
Okay.
Uh, that would to me signal more short term or more downside
Yeah.
for their sell off. But for now, it just looks like consolidation at these levels, like it's waiting for something.
Hmm.
And so you would want to see it get back above those highs that it made, which were in November, for a sign of continuation. But that's it for now, really, is I can say,
Yeah.
well, don't want to see it get below two.
Yeah.
That's sort of the support level I would watch. Look
Okay.
at the 30-week average, and or you can look at like 100-day. That's
30 week
another.
or 30 week or 100-day. Okay.
Mhm. The 100-day also looks like it's a sort of
Right.
general zone of support here.
Right.
So you would want to hold those averages, and continue to hold them as a sign that okay, this is maybe just consolidation,
Hmm.
that it's just waiting for the next thing.
Hmm.
Um, but yeah,
Well,
I can't really forecast
can't say
where.
anymore. No,
Yeah,
I didn't mean to imply that you
yeah.
should. Oh, yeah, I was just joking, of course. Well, but maybe it's waiting for the next big thing. Carrie Landis, who is a director on the board of
Mhm.
directors of the company and very familiar with it, a major investor, told us on this program that they do believe they will have their first commercial contracts this
Mhm.
quarter. So I would think that
Mhm.
might be what
Okay.
the market's waiting on. And if time goes on and that isn't forthcoming, that $2 level could very well be tested. And I would expect
Mhm.
it would be. I want to thank you very much, Brett, for taking the time. I mean, it's a Friday afternoon. You're probably looking forward to a little break for the weekend, or maybe your dad won't let you have time
Yeah,
off.
let me get out of here now.
You
Yeah.
guys are going to be working all weekend, answering phone calls. Yeah,
Yeah,
anyways,
this is when we do the weekend report. We're starting on that
you
now.
do
So
the
yep,
weekend report.
yep.
Well, then we'll let you get at it, Brett. And thanks to you and your father for the excellent work you guys do. And thanks for spending time with us again. It's always appreciated.
Thank you, Jay. Thank you for having me on.
You bet. Well, folks, that's it for today's show. Next week, John Slotnick. He's the CEO of Nevada King Gold, and Andy Shetman planning to be with me in a couple of different programs next week. So keep your eye on your inbox for Substack announcements. Until then, goodbye and God's blessings to you.